Welcome to Tax Smart Hustlers, where each episode unveils powerful tax strategies and financial wisdom for the go-getters. Hosted by Thrive Tax Solutions, this podcast is a gold mine for small business owners and real estate investors seeking the path to financial freedom. We dive into practical, actionable advice on optimizing taxes and accelerating wealth growth. Join us to become a tax smart hustler.
And welcome to episode 2 of Tax Smart Hustlers podcast. My name is Aaron Siegel, and I'm a tax strategist at Thrive Tax Solutions in Boulder, Colorado. So today we're going to be talking about the IRS making some changes here coming into 2024. And really, they involve processes that have been in place for years and years, but they were held off or frozen during the COVID era. So from early 2020 until now, January 2024, they really haven't been doing a whole lot in terms of the automated collections, the letters that you would expect in the mail if you had delinquent tax debt. So for some of you, this may not apply, but it seems like demystifying the IRS process of collections is probably something that would be useful to keep in your back pocket or share with a friend as this resumes. So really, the component that the IRS is turning back on, as they've announced here in 2024, is this automated collections process. And the IRS has two different portions of the collections function. So the first is this automated path. So the vast majority of taxpayers end up in this path where you go and you get assigned to one of the major campuses at the IRS, and you start receiving a sequence of automated letters and things that are going to happen as this tax debt continues to be delinquent. On the other side, there's the field collections, or kind of what you would think when the IRS agent or the revenue officer is going to come and knock on your door and work on this collections path with you. Oddly enough, they've actually stopped doing this unannounced. It was a change here they've made in 2023. So you'll still get a letter first, a letter 16 saying that the revenue officer has been assigned. And at that point, they'll try to schedule a meeting with you. But ultimately, unless you have a high tax debt or there's a special circumstance that would apply to get you assigned to the field, you're probably going through this automated collection path. So with that, the IRS actually announced multiple times in December. There's 3 different communications that came out trying to explain, hey, we're about to resume collections in early 2024. So we're going to walk through those 3 notices. Each had a little bit of nuance to it and kind of explain what they've announced and then what that collections process might look like if that's something that you or someone you know would be facing here going into 2024. So the first announcement was this IR 2023-244. It was a news release that went through and said, hey, we're about to send out these new letters. So letter 38, where we're going to be announcing that we're resuming these prior notices that have already existed. These are going to be coming out in early 2024, and they'll be staggered over time. So that way they're not hopefully flooding their call centers with people who are concerned about these new letters coming out. So when this resumption happens in January 2024, essentially you've had this period from 2020 until now, let's call it January 2024, where if you've had debt that was in place, the debt has been valid. It's just the IRS has not been reminding you or sending out these collections notices to attempt to collect the debt. So during that period, the interest and penalties that have been assigned to these debts were continuing to accrue behind the scenes, and taxpayers generally didn't know that that was happening. So as a part of this resumption, the IRS is actually announcing there's going to be an automatic penalty relief for about 4.7 million taxpayers. And what that's going to encompass is a lot of that penalty period or the penalties that were assessed during the 2020-2021 tax years. So with that, the good news is that the penalty amounts are not going to be as painful as they might have been had they not done this automatic penalty relief. There's some carve-outs for high tax debt in particular where it may not apply automatically, but there's still other opportunities there. So that was kind of the first news release to say, okay, hey, the notices are coming. Then the second part was an Internal Revenue Service notice. So this is more of a kind of the procedural aspect of how this is going to happen. And it was 2024-7. So in that detail, they really lined out, okay, we had suspended these notices going out in March of 2020. They've already turned on 2022 tax year notices. So if you filed a return here in 2022 and you had a balance due, you've already started to see these collections notice coming out. And those typically are going to start start at CP 14. They're going to go to a CP 501, CP 502. There's this progression that always follows. So we are seeing those notices getting delivered on a regular basis. Now, the periods of 2021 and earlier that had been suspended are going to be resumed in waves. So in early 2024, we're going to start to see these notices coming out for 2021 and going back in prior tax periods. So with that, generally, there's this collection statute that says that you can only enforce collections for a 10-year period once they've assessed the tax. So this clock has been running behind the scenes. So that means some of this older debt may have actually fallen off the radar before we get to this day. But there's going to be this compression in terms of the collections window where essentially what they may have had 10 years to collect is now down to 7, or for older periods, they might be into the last year. So you may see some of this process accelerated compared to its prior path. Now, with that, Notice 2024-7, it went again and it said, hey, we're issuing this automatic relief. If the assessed tax is under $100,000, there's nothing you have to do. You're going to end up getting a notice that's going to show that this automatic relief was applied, and it'll show up on your transcripts here, in early January. And this notice, it's saying, okay, we're specifically looking at if you had a Notice CP 14, so where the tax was assessed, or a CP 161 that was issued on or before December 7th, 2023, so when they started to draft the notice, that covers tax year 2020 or 2021. So that's a mouthful. Basically, what they're saying is this relief applies specifically to tax years 2020 and 2021, where essentially this entire period of collections had been suspended because of COVID. 2022, we're kind of back to where things were before. They were the normal process, so there's really nothing that's going to apply to that period. And then this relief that's being applied is going to cover the period from either the first notice that you received or February 5th, 2022, and they're going to extend this out to March 31st of 2024. So you've still got a little bit of time to kind of figure things out and make payments, and then everything goes back to normal in terms of the penalties that would accrue on the account. And then this third piece, so the third of this trifecta was a fact sheet, and so this one was FS 2023-28. In that, really, the thing that I got out of the notice more than anything is the IRS is really trying to encourage people to come forward now before automated collections resume. So there are collections alternatives that are available. We'll kind of run through the steps here later in the episode, but they do offer payment plans, offers in compromise, a currently not collectible status if you're facing financial difficulties. There's a whole number of options that are available. So what was interesting to me is that the IRS, you can tell, is really coming out in terms of the public relations machine and saying, hey, if you do have open debts, now is the time to come forward. So all that being said, the question becomes, and this is the primer, what does the automated collections process even look like with the IRS? You might have seen letters in your mailbox in the past, but there really is, because it's automated, a progression that you're going to see in this collections process in many cases. So the way it typically works is you're going to file a tax return, or there's going to be a tax assessment made, and the IRS is going to send you your initial notice saying, dear friend, you owe this money from the tax period. Please make payment. If you don't get into a payment plan or make that payment, you start to get a series of escalating warnings where they say essentially over and over, hey, we've asked you to pay. You have this balance due. Please make a payment. If you continue to not respond to the notices, then they're going to make an assignment to one of the two pathways. So it's either going to go to the automated collection system, which is the campus driven. And literally think about it as a big IRS campus. People are working in a call center or an office building, and that's what they're doing, is just working a high volume of cases. The vast majority of taxpayers end up there. The secondary path is if you have a high balance, you're high risk, there may be some other aspects to it where the IRS wants to take a closer look. They're going to assign you to a revenue officer. So it's going to be somebody who's actually out in the field in an area close to you, whose job is to go and visit taxpayers and work through this collections process. The letter that you would want to look out for is going to be called Letter 16. And that's in that letter, they're going to tell you, hey, we've assigned a revenue officer. Be ready for contact. Here's their contact information. At that point, if you have been assigned to a revenue officer, that's probably the time you want to get somebody involved and say, hey, this collections process is going to escalate quickly. It's not the automated collections path. It's kind of choose your own adventure on the path of the revenue officer. So you might want to have help at that point. As it continues through the flow, you're going to see a few different things that can happen. So if you have future year tax refunds and you have an open balance, the common letter you're going to see is the IRS telling you, hey, we've taken this refund and we've applied it to a prior year balance. It can also be in the case of newly wedded spouses where perhaps you didn't realize that your new spouse had former tax debt. You make your first joint filing and you receive a letter from the IRS saying, hey, we've taken your refund. We've applied it to your spouse's debt. So that's generally probably the highest volume that you're going to see is every year after the tax season, people get surprised by the tax refunds getting pulled. The next piece is if you have a higher debt, so if it's more than $59,000, the IRS does have the ability to certify your debt to the Department of State, and at which point they will revoke your passport. So that can be a big deal. If you're used to traveling and leaving the country, you may end up with a notice saying, hey, your tax debt's been certified as seriously delinquent. And when that happens, they can take your passport. Beyond that, you'll see the federal tax lien. So by default, the IRS, when they assess a tax against you, there's already something called a statutory lien, which basically means even without filing a piece of paper saying there's a federal tax lien, they essentially have a lien that backdates to that point of assessment that is behind the scenes. But what they do when you start to get later in the collections process is they're actually going to file a paper notice of a federal tax lien. It's really the kind of think about it as the public shaming as far as the tax lien goes, because it is a public record. And when that happens, it's typically when your phone's going to start to ring with all the different companies who are wanting to help you settle your tax debt for pennies on the dollar. With that, it also can really impede things like refinancing properties or even obtaining credit. At that point, it's a public record. Once it gets beyond that, so this tax lien is filed on paper, then the next step would be they issue a notice of intent to levy that includes some things called your collections due process rights. Now, when that happens, that's essentially the last step before they're saying, hey, we've tried everything else that we can. We're going to go and essentially seize or levy the assets, perhaps in your bank account or through payroll. When that happens, when you get that letter sequence, that is a time you want to get engaged with the IRS and make sure that you're doing everything you can to get into a payment plan or work through a collections alternative, because the next step is going to be the levy or seizure. At that point, they don't make an announcement. They've already warned multiple times. They've sent you that notice of the intent to levy. The next thing that's going to happen is you're going to look at your bank account and all of a sudden money's been swept. And at that point, the IRS has seized or levied that money. Same thing on the payroll front. Even Social Security benefits, they will go after these items and just essentially seize the vast majority of the funds and apply it towards that debt that's in place. Once you have that, there's a very limited period of time where you can try to reverse that levy process before it becomes final. But at that point in the game, it really is, you're kind of playing against the clock and it gets to be a lot harder. So all that being said, there's the collections process in a nutshell. The biggest thing is there are alternatives available. So in our practice, we deal with a lot of tax resolution, but there's going to be a few things that you can do to kind of work through this process if you have some of these debts that have been in place from 2020, 2021, or before. So the first and foremost thing is to get into any of these different programs with the IRS, you have to have filed your taxes for the last 6 years. So there's this 6-year compliance requirement. So generally, if you haven't filed those prior periods, you'll want to work with a tax professional or somebody who really focuses on the collections process or working with the IRS in a resolution focus to get the 6 years on paper. There are strategies you can put into place on how to deal with the state versus the IRS, lots of different choices. But at this point, you want to get professional assistance to make sure that you're doing things right, you're getting things on the books, and then you're ready for these collections options. With the collections themselves, there's really 3 core areas that you would be working with the IRS in terms of trying to resolve this tax debt. So the first is currently not collectible status. So if you've had a job loss, major medical issues, there's essentially you have no ability to pay this debt. They may put you into a currently not collectible status. Essentially, what that means is that they're going to stop the collections with you in the meantime. The debt's still valid and that 10-year clock still runs. So if you maintain the status for the entire 10-year period, eventually that tax debt's going to fall off. But as a part of that process, they may have you go through and recertify essentially how your financial status is moving forward. Since you're filing a tax return every year anyway, they have the ability to monitor every year. So if all of a sudden the income's coming back up, they may very well re-engage in the collections process with you. The second, the most common thing that's out there is this installment agreement. And essentially, it's a payment plan over time where the interest and penalties are still going to accrue on your account, but you're in a collections agreement with the IRS. You're making those installment payments every month. And as a result of that, they're going to stop this escalation of the collections. So as long as you're making your payments on time and you're in communication with the IRS, you make your payments. You're either going to fully pay that agreement over time, or in some cases, there may be a partial payment installment agreement where it says, hey, you don't have the ability to pay this entire debt. There will be a portion that will fall off at the conclusion of this agreement, but you have to make the installment agreement payments throughout this duration up until essentially the collection statute expiration date. And then the last one is the one that you've heard. A lot of times there's this misnomer about the Fresh Start program that the IRS had in years past. Essentially, a lot of times you'll hear it now as we settle tax debts for pennies on the dollar. That's generally referring to this offer and compromise. With that, essentially, what you're coming to the IRS to say is, listen, I have this tax debt. There's no way that we're going to be able to pay this in full by the end. And we'd like to settle it now versus getting into that partial payment installment agreement. We say, okay, this is an amount of money we could pay you right now to settle the debt and be done with it. It's not the fastest process in the world. You definitely want help to get this done. But once that happens, if they accept it, you make the payment to them either in one lump sum or over a short period of time. And the rest of that tax debt ultimately is forgiven, or, essentially the offer is accepted at that point. So a few different options. I guess what it all comes down to is this, if you or someone has open tax debt and it's not something that you can pay right away, it really makes sense to get involved with a professional. So whether that's a tax attorney or an enrolled agent, essentially you want somebody who can go and represent you in front of the Internal Revenue Service, help explain what these letters mean, what the notices are, where you are in the sequence of things. And from there, essentially, you can start to get this cleaned up. The hope is this, right, is we want to stop the bleeding. So for future years, you want to get dialed in, make sure that if you have estimated tax payments, you're making them. If you have open debts, we don't make it worse. We want to clean up the future. And then we focus on, okay, what can we do in terms of this open debt to keep you out of kind of this collections process? The automated path, downside of automation, it can be really hard to find people. It's going to be this progression that keeps going on. The way to stop it is just with getting into one of these collections options. The IRS ultimately wants to collect. They don't want to keep sending you letters. So getting involved early is a good thing. If you do end up in the field and you have a revenue officer that's in place, those are the times where you want help. There's something about your collections case that is of interest where they've said, hey, we're going to send you to the field rather than just deal with this through automation. At that point, get help. That's all I can tell you on that front. So with that being said, hopefully you found the episode useful. Even if you're not in collections, the letterhead is scary. Even if you've done nothing wrong, you get the letter, it definitely can spook you on a good day. So hopefully this helps, at some point if you ever need it. Let's connect. We'll keep this podcast going. We'll be bouncing around between doing tax strategy and some of this tax resolution aspects. So you get kind of both sides of the equation. But go ahead and follow us on social media. We're at Trust Your Taxes on all the platforms. Feel free to email us if there's things that you want to learn about. If you've got questions about what we just talked about here over the last 20 minutes or so, send us an email. We're at hi@taxsmarthustlers.show. Or you can visit the website at taxsmarthustlers.show. There you can subscribe to the podcast feed, see where we are across the board. Hopefully, if you like it, leave a review. We'd love to see some of that coming in. And if you know somebody who's facing letters or starting to get letters down the road, point them to this episode. If nothing else, Hopefully this episode has taught you enough to understand at least what the process looks like, so maybe it won't be so scary when these notices come in. So with that, I hope you guys are all having a great last week to 2023. We will be back next week with some more in episode number 3. But otherwise, have a lovely weekend, and we will see you on the flip side. Bye-bye.
The information provided in this podcast is for educational purposes only and should not be construed as professional tax advice. Consult with a qualified tax advisor for personalized guidance tailored to your specific financial situation.